Hi there, welcome to kneppyinvests. One of the first companies to release their Appendix 4C every quarter is Selfwealth, and they have not disappointed us for the June quarter. In fact, they were the fourth or fifth company to release their Appendix 4C. And because they do release their quarterly report quite early, I've always done a video on this company, and this quarter is no different. Now, one of the reasons I really like doing a video on Selfwealth is they were a growing company. They were actually operational cash flow positive. However, things have changed over the past year. About 1 year ago, they did a couple raising. I think it was about 3 days after they released their Appendix 4C for the June quarter in July. They did a couple raising, a significant couple raising at that. And one of the reasons they decided to do that couple raising was because they wanted to spend or increase their spending for growth. So the company went from being operating cash flow positive to operating cash flow negative. And we haven't seen the benefits of that increased spending yet on the growth in the company. And if we don't see it in the next year, that will be concern for Selfwealth. So for those who are living in a cave, Selfwealth is an online share trading platform. You can trade ASX companies, international companies, definitely American companies. They're also getting into crypto, and I believe they've also opened up trading on the Hong Kong exchange as well. I no longer trade through Selfwealth. I have moved along to Superhero simply because they have lower fees. And if Selfwealth decided to decrease their fees, I might shift back to Selfwealth. At this point in time, I still have companies within my Selfwealth account simply because I don't want to sell those companies just yet. Selfwealth was founded in 2012, listed on the ASX in November 2017. Current CEO is Kath Whitaker. She became CEO in April 2021. So I think this change in strategy in July last year, where they decided they had to spend for growth, was because of Kath Whitaker. I could be completely mistaken with that, but it just is, it's not a coincidence that this company started to spend way more when she became, or just after she became the CEO. One of the largest shareholders, if not the largest shareholder, is Lee Gaywood and Gemma Cooper. They have an 8% stake in the company. Now to the market cap. And I'm comparing the market cap right now to the last time I did a video, which was in April of this year. And we haven't seen much of a change. Share price of Selfwealth has drifted lower, but not by a lot. So share price has decreased from 21 cents to 17.5 cents, which means the market cap of this company is sitting around about $43 million right now. And then the ticker code for Selfwealth is SWF. Now on to the Appendix 4Cs, but before we have a look at the June quarter for financial year 22, just going to go back to their final quarter for financial year 21, so 1 year ago, just to see how this company has done, how their business has performed over the past year. So 1 year ago, receipts to customers, $5.1 million, and this company was operational cash flow positive at this point in time, not only for the quarter, but also for the full financial year. So in this particular quarter, operating cash flow positive, $140,000, and operating cash flow positive for the full financial year to the tune of $1 million. And because the company at this point in time wasn't spending a lot of money in financing and investing activities, cash on hand actually increased and finished the particular quarter and the particular financial year at $7.5 million. So it was a little bit of surprise with the amount of cash on hand and no debt that they actually did a capital raising or announced a capital raising 3 days after they released this particular Appendix 4C. And this capital raising released or announced on 15th of July was a capital raising for about $12 million. And the whole reason they announced this or wanted to do this capital raising was to accelerate the growth strategy. More than likely, that was to do with getting into Hong Kong, cryptocurrencies, that sort of thing. So when you're actually spending $12 million to accelerate growth, you expect a little bit of growth within the next year. We really haven't seen it at this point in time. They have mentioned they aren't anticipating spending any more money on staff. You'll be able to see the increase in staff costs in the next slide, but they're not anticipating any increase in staff over the next year. And they are expecting cash receipts to climb. So potentially we might see the benefits of this placement, of this increasing spending in the next year. If we don't see it, I think there is trouble brewing for Selfwealth and its management team. Now on to the most recent June quarter for financial year 22, the Appendix 4C, they released on the 12th of July. Receipts to customers have climbed from 1 year ago, but not a significant climb, only up $600,000 to $5.7 million. They did that $11.7 million cap raising in September quarter last year. And that's why the cash on hand actually has increased, because they have really ramped up their spending. Now, receipts up $600,000, product manufacturing down $200,000. So the reason why Selfwealth is now operating cash flow negative by $1.8 million, even though cash receipts has increased, is because they've really ramped up the spending on advertising, up $800,000. Staff costs up $1.7 million, so a significant increase of staff over the past year, and administration costs up $230,000. So overall, the increase in spending in those three facets are up almost $2.8 million. But if you take into account product manufacturing is down, that means overall spending is up $2.5 million. So the increase in receipts didn't really overcome that increase in spending, and that's the reason why the company is now operating cash flow negative. And then you have a look at the last 12 months. So remember, last year, they were actually operating cash flow positive for the full year. For this full year, they're actually operational cash flow negative by over $7 million. So you can just see the effect of this increasing spending has had on the financial situation for Selfwealth. And that's why I think the next year is very important for this company. Though won't want to be operating cash flow negative by a similar amount in the financial year 23, because I do think there will be problems, not only for the company itself, but again, for the management team, including the CEO. Now, onto some key financial metrics that Selfwealth does include in the commentary of their Appendix 4C, and they're looking at operating revenue, active traders, client cash, and securities held on hand. They look at the year-on-year change. They don't actually put in here the quarter-on-quarter change from the third quarter to the fourth quarter, but we can actually see the numbers here. And the main thing here is Selfwealth is growing their key financial metrics. When you look on year-on-year change, when you do look at quarter-on-quarter changes, there are some facets here or some metrics here that aren't growing. In particular, client cash has gone backwards from the quarter three, and securities held on hand has also gone backwards. But active traders have gone up. That is an important thing. Selfwealth want to see the active traders actually going down. That would be a negative, and operating revenue was also going up. So a few positive things here, also a few negative things as well. Now to the receipts history for Selfwealth, going back to when they listed on the ASX in early 2017. And when they listed on the ASX, the first quarter, they only had $40,000 in receipts. So receipts have grown from $40,000 to $5.7 million. That's what we want to see. But not only that, the receipts trend is up, albeit it is slowing down. In fact, you could argue with me right now, over the past 6 quarters, receipts have gone sideways. But if you take out that record quarter in March 2021, when they experienced or received $5.8 million in receipts, if you take that away, the trend is definitely still up. So you've got to look at the overall trend. Don't look at 2 data points and determine whether the trend is going sideways or downwards or upwards, just based off those 2 data points. And the most recent quarter, the June quarter, was the second best quarter in regards to receipts, $5.7 million. I would imagine and expect receipts to exceed $6 million within the next few quarters. If they don't, again, I think the company is in trouble. The other thing you'll notice here is the explosion in receipts in 2020. So Selfwealth was benefited by COVID-19 and the increase in interest in equities. And that's why we saw receipts increase from 1.2 million in December quarter 2019 all the way up to above $4 million by the June quarter 2020. And possibly, if we have another massive crash in the markets, we could see a Selfwealth benefit from that again. And if we do see a massive crash, we might see more trading on Selfwealth platforms, and more trading on Selfwealth platform would benefit Selfwealth. If the market just grinds slowly upwards, you see less trading, and that's not beneficial for Selfwealth. So the trend is up for Selfwealth. That's the most important thing. I'd like to see an acceleration in the upwards trend for receipts, simply because they increase that spending, and because of that increase in spending, we want to see receipts starting to accelerate from here on in over the next year. Now to the charts for Selfwealth. The first one here is the weekly chart, going back to when they listed on the ASX in 2017. And in the next chart, we'll look at the daily chart. So just looking at different perspectives here. If we look at the long-term perspective here, we can see where there was a lot of hype around Selfwealth, and that was in 2020. So during the COVID-19 financial panic, share price of Selfwealth, we got down to a low of 10 cents. And then within about 3 to 4 months, the share price had risen from 10 cents to a high of almost 80 cents. In fact, the share price did get above 80 cents in about August of 2020. So it didn't take long for the sentiment in this company to shift around from being negative to being highly positive. But that was a share price high in August of 2020. The share price has been drifting lower ever since then. We did see a little bit of a spike, a little bit of a rebound in the share price in the start of 2021. Share price went from around about 50 cents to 80 cents. So it tested that previous high we saw in August. But ever since that test in February of last year, 2021, and I believe that had something to do, that spike in share price had something to do with the half-year report, and we'll look at that in the next slide. But ever since that half-year report in 2021, the share price has been drifting lower and lower, and there's no end in sight right now to the decrease in the share price, just looking at the weekly chart. And if we take a look at the daily chart here, going back to the start of 2021, going to where we did see that really interesting bit of trading on February 19th, 2021, when the company released the half-year report. Share price opened up that day about 10% higher on release of the half-year report. So the amateurs in the market loved that report and immediately started buying. And then the professionals saw the report, digested the report, and started selling because it was negative. And overall, the share price was down 11% on that day. And that was the catalyst for re-rating in the share price. And that moved the share price into a downtrend. And the share price really moved into a downtrend a few months later and has been in a downtrend ever since. Share price keeps on falling. And when the company has released or did release Appendix 4Cs, and during 2021 and start of 2022, the market didn't really like any quarterly reports this company released. Share price decreased 12% upon the release of their June quarter report last year, and then another 17% when they released the December quarter report in January of this year. And just after the release of that quarter report in July last year, 3 days after that, they released the announcement of the capital raising, and the share price decreased after that as well. You'll notice at times it has been a bit of a rebound in the share price, but whenever the share price moves towards or hits the 100-day moving average, that is a really strong resistance level. We've seen that happen 3 times before, and every single time the share price hits that 100-day moving average, which is above a moving average line, the share price starts to fall away again. So it's happened 3 times in the past. So really, anytime the share price gets in between the 100-day and 50-day moving average, that would be the time to sell if you hadn't sold already. So no end in sight right now to the share price decreasing, still in a downtrend, still some negative sentiment around this company. The main thing in regards to this most recent Appendix 4C, the market didn't care at all about it. Share price was unchanged on the day. So you'll probably say, and the volume was really low as well. So you might say right now, the market is not interested in this company at all right now. That's all I have for this June quarter Appendix 4C video for Selfwealth. If you do have any thoughts in regards to this company, I'd love to hear your thoughts, your questions, your opinions. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.